Okay, so the purpose of this video, we're going to run through step by step how to basically get started in trading. So you know you're interested in trading, you want to get started, you don't know where to start, you need to create a strategy, you need this, you need that. Basically you're at that point where you're thinking, well, what do I actually do? Because there's loads of information online, but no one actually tells you where to go, what to do. They just teach you all of this basic stuff that you can find for free all over the place, all online. But no one actually gives you any information worthwhile knowing. So hopefully this video will get you started, start the process, get the ball rolling with your trading journey. Like I said, the main thing is you need to find your own way. This will get you off the ground, but at the end of the day you need to go through and experience certain things, make mistakes, learn from your mistakes. This has taken me 6-7 years to get to the point where I'm at today, and I'm still learning. I'm still a beginner. You know, there's people in this industry who've been trading for 40 odd years. I'm humbled by that. I know that I'm not a professional by any stretch of the imagination, but I'm trying to get to the point that these people are at, and I'm trying to help you get to the point where I'm at. So to begin with, we're going to start from the very beginning then. So you're in a bit of a rut, you don't know where to go, you don't know what to do. Head to my website. Again, the main thing that OT Trades does, so OT is for Ollie Thompson, that's me, and then Trades obviously. OT Trades, so what I do here is I sell my software. That is the main purpose of OT Trades. This video, I'm not going to be plugging my software, I'm not going to be trying to sell that to you. You don't have to buy that. You can trade. There's millions and millions of ways to trade. You don't have to trade using my software. But go to my website. There's loads of free information on here, all the educational videos. Obviously, introduction to OT software. Introduction to Forex trading, so how to create a strategy from scratch. This is taken into consideration that you've already, you sort of know what you're doing with trading. Fibonacci retracement tools. So this, I obviously trade using advanced and harmonic patterns, which are based on the Fibonacci retracement levels. So this is quite important if you are looking to trade in a similar way that I do. Indicators, there's some videos on certain indicators and lots of information on each of these as well. So go over there and check that out. Engulfing candles, indecision candles, reversal candles, so there's information on these and what to look for. Again, there's no specific way to trade, there's no right or wrong way to trade. As long as you can create a profitable strategy, it doesn't matter. And hopefully we're combining all of these, all of this information together, you can sort of create your own. Now I do give away all of my strategies. When you purchase the software, I give away strategies to everyone who purchases it. And if they're struggling with that, I show them how to set it all up. My software can be fully automated as well. So once it's set up, and it just runs in the background, you don't have to even look at your computer. Patterns, these are all of the conventional patterns. I personally have created my own patterns which I trade, which are significantly more profitable than any of these patterns. But it's important, if you are looking to trade a similar way to me, then it's important that you understand the basics, run through these patterns, understand how they are set up, how they're traded. Before, say, even before you purchase the software, you need to know what the software does. So yeah, that's important. So to begin with, we'll go to free stuff. Download this backtesting spreadsheet. There's a video here on how to use this spreadsheet, so I'm not going to cover that in this video. So watch that before you go ahead and download it. I've already downloaded it here, so open that up. So once you've downloaded this, you've got this ready. This is where you're going to be inputting all of your data. So all of your backtesting results are going to be inputted into here. So we've got this set up ready, target one. So for this example, we're only going to be targeting one target. 2 targets, we can go here and target both targets here. But for this example, we're only going to have one target. So once you've got that, you're obviously going to need a platform to trade through. I recommend Alpari. I don't recommend live trading with them. Don't get this mistaken. I do not recommend at all live trading with Alpari. However, for backtesting, you can go on and download their MetaTrader platform, which is linked to Alpari as a broker, and they've got the data on every single pair, which goes all the way back to 1999. So you can test 21 years worth of data. Obviously we're in 2020 at the moment. 21 years of data, which obviously increases the accuracy of your backtesting results. So go ahead and download the MetaTrader 4 application from Alpari. Once you get to live trading, I personally at the moment, I was trading with IG for years, but I've recently switched to Forex.com, so that is who I trade through. I can recommend them, but at the end of the day, it's your choice. But for backtesting, Alpari, definitely go ahead, download that. Once you've downloaded that, this is the MetaTrader 4 platform. Now, if you're not familiar with MetaTrader 4 as a platform, don't worry, there's plenty of videos out there. I'm not going to waste my time and your time going through that now. You can go and self-educate yourself on how to use this platform. It looks dated compared to some others like TradingView or something similar, but it's a massively reliable platform, and it does everything that TradingView and that can do. It's just the layout looks slightly different, but this is how I trade. This is how I live trade. I trade through MetaTrader 4 purely because we can load the load of experts on here, expert advisors, and we can automate my software. So you see my software here, and we'll show you that in a minute. But right, so you've got the spreadsheet, you've got the MetaTrader 4 platform. So what do you do next? So I'll show you my software quick. This is my software. To increase the speed of backtesting, I've included a backtester into my software. So at the moment we've got the bat pattern, the butterfly pattern, the Gartley pattern, and the cipher pattern printed onto the charts. We can turn these off, turn them back on. So just for a quick example to show you this, if we go into the indicators list, then go down to the bottom, change the file name to example. Okay, so that's just what the file name is going to be saved as for this backtester. Wait for this to load. Right, so for me, because I was spending so long backtesting and it was taking me, like I said, years and years and years to get anywhere with it, I implemented this backtest into my software. So the software automatically identifies all of these patterns as well as 3 custom patterns. I said to you before, I only trade my own custom patterns, and you can trade your own if you have this software. You just change all of the ratios and stuff like that in the custom patterns, set up in the indicator inputs. So you can change all the custom patterns inputs here, and you can trade those whichever way is most profitable to you, and that's what I've done. But for this example, bat, butterfly, Gartley, and cipher patterns, click on the pattern, record it however you want. So loser, obviously this is the conventional way of trading I think this is a cipher pattern. Yeah, cipher pattern. So here, conventional way of trading a cipher pattern, it's obviously gone straight through the completion point and it's gone to our stop loss. So here we're looking for a reversal at the D point. Price hits D, you enter a buy limit order, and target in the 382 and 618 retracement of C to D. And obviously we've got a losing trade here because it's gone straight to our 113 stop loss, and yeah, obviously stopped us out there. So again, here we haven't hit the stop loss here. The high is 1.11176, so we're 0.3 pips away from hitting our stop loss, and then it's reversed and hit both targets, so we can put a winner 2 here and go further back in the charts. This one here would have come down close to our stop loss, reversed and hit our 382, didn't quite hit our 618, so here winner 1. This pattern didn't complete, this pattern didn't complete. This pattern here, now I personally don't like this retracement here, so I wouldn't have traded that, but just for this example, we do this as a loser. So I wouldn't have traded this because I need my C to D point to be straight, so I don't like this reversal here before continuing higher. But just in this example, we'll say we got in here, again, a sell limit order here, so we're targeting the 382 and 618 of A to D, and we've hit our stop loss. So yep, that's a loser. This one here we probably wouldn't have got in on because the C and D leg pretty much form in the same candle, 2 candles, even though it would have been a winner, so I just leave that one out. This one here would have been a loser. Again, it's gone straight through our D point, so we've entered the buy limit order and it's just gone straight down to hit our stop loss. Keep keep going. This would have been a winner 2 because we've come up close to our stop loss and then reversed on this wick here, hit both of our targets, and then it's gone to our stop loss. So we've hit our targets before prices moved higher, and so on and so forth. We go back through and just keep clicking on the patterns, record it as a winner of the first target, winner of the second target, or a loser, so it would have hit the stop loss. And this is automatically saved into your files in the data folder. Files, example. Remember, I changed the name as example in the file name. So open this up. This automatically saves, obviously here we've got the date and time of when we got in, when the D point completed, entry price, so where that D point is, the stop loss, price, take profit price, take profit to price, risk reward of the first target, risk reward of the second target, the results of the first target and second target. Obviously, if we had a losing trade, they're both going to be negative, whatever the distance of the stop loss is. Here we had a winner of first target and winner of second target. Obviously, the distance to the first target and distance to the second target in pips. Here we had a winner of the first target, and obviously after the first target tip, we've moved our stop loss to break even, and therefore it's come back down. It's hit our first target, come back down to break even, and got us out of 0. So we've had a winner of 12 pips. Here another loser, and a winner of both targets. Here we've got the ratio of the B point, ratio of the C point, and the D point ratio, which is going to stay the same depending on the pattern you're trading. Again, I'm not going to run through this if you're confused by this. I've made videos on this before, so go and watch them. I haven't got time to run through all of this in one video. But from here, once you've gone back through, you can copy and paste all of the results and paste them into a spreadsheet like this, where you can do your money management. So from that previous spreadsheet, you can work out whether you've got a winning strategy or not. And once you've found a winning strategy, you can paste it into your money management. Or even if you've got a losing strategy, paste it into the money management and see if you can turn it into a winning strategy by altering the risk and something like that. Again, we're not going to go through that at the moment. For this example though, enough of my software, close this chart down. For this example, I'll keep it really simple. So all I am here on the euro dollar 1 hour chart. I've gone back into the history of the chart. I've got the 200 moving average, exponential moving average in red, and a 50 exponential moving average in blue. So for this strategy, again, I don't know if this has worked. I don't know if this is a profitable strategy or not, but you'll see a lot of trading gurus, or whatever you want to call them, use moving averages as their strategy that they're giving away or whatever, but they never actually show you the results of which. Like I said, I'll show you the results of my strategies in a minute, but when you purchase software, I'll show you, like I said, I give away the strategies, the setups, and all of that sort of stuff. But I'll show you the results of that in a minute anyway. But they show you all of this, and they don't actually show you the breakdown. They show you, all right, this point you should buy, this point you should sell, but they don't actually show you how that strategy performs. Now for this example, I don't actually know how this performs or not. I'm just going to run through what you should be doing to create your own strategy. Again, this isn't a strategy giveaway. This is just what you should be doing to backtest. So at this point here, what I'm saying is my rules for this strategy are every time the 50 crosses below the 200, we can only sell. Every time it crosses above, we can only buy. So there's our first rule. So if the 50 is above the 200, we cannot sell. We're only looking for buying opportunities. If the 50 is below the 200, we cannot buy, we can only sell. The next reason is our entry reasons. So the moment it touches the 50 EMA, we're looking for an entry reason. So again, we can only sell, and once it touches, that is when we're looking for a sell opportunity. Okay, so we're not just going to sell as soon as it touches, we still haven't got to that point yet. We're looking for a selling opportunity. That selling opportunity comes in the form of a bearish engulfing candle, which we have here. So here we've touched the 50 EMA. We've got a push to the upside, and then the next candle is a bearish engulfing candle. Again, if you're confused by this term, go to my website and read up on engulfing candles. But basically, this candle completely opens and closes greater than the previous candle. So it completely engulfs the previous candle in the direction of which we're looking for a buy or sell order. So in this instance, we're looking for a sell opportunity. We get the touch of the 50 EMA, we get the bearish engulfing candle, and we would sell. So just for this example, I'm going to look for 15 pips stop loss to 15 pip profit target. So 1-to-1 risk to reward. So we're risking £100, for example, whatever your you like to think of in monetary terms, whatever your account size is. So just for this example, we risk £100 to make £100, or we risk 15 pips to make 15 pips. So here, from this entry point here, we're going to go up, and I'm using a 5-digit broker, so it's 150, up to 150, which is just off the page. So up 150, so our stop loss would be up here somewhere, and down 150. So our profit target is here, 1.10042. So we haven't hit our stop loss, price has just reversed and hit our target. So this would be a winning trade. So once you've got that, open your spreadsheet up, type in a pair, Euro USD. Oh, we'll write this. Euro USD. Oh, password is password to edit cells OTFX in capitals. Okay. Euro USD. Strategy can just be moving averages, MA, or actually EMAs. Stop loss was 15 pips. Okay, that will audit itself. So this is taken into account the spread, so you don't need to edit this cell. Chart stop loss 15 pips. Taking into account the spread, we've got 1.34. Therefore, it's that. We can change that to, let's just change that to 0 for now, so we don't want to take into account the spread. Chart profit target was 15 pips, so 1-to-1 risk to reward. We obviously hit that 15 pips. That turns green because it's positive. If we lost, then we do negative 15 pips. And that'll turn red. So we actually won this pattern. So positive 15 pips, and that's all you need to input. And we can put in here whenever the trade was. So we would have entered on the close of this candle. You see at the bottom here, close of this candle was 11 o'clock on the 26th of November 2019. So you can put that into the comments. Any other comments that you think about, you know, whether about the trade, so whether another rule I'm going to implement into this strategy is we can't have an entire candle range above this 50 EMA. So like this, the low, the high, the open, the close is all above this 50 EMA. So we can't have that. However, we could test it to see if that works. So in the comments, you could say, right, okay, we got in here, but we did have, in the comments, you can say we had one candle complete range above the 50 EMA. Once you've done that, you can filter through these comments and say, okay, we're going to filter out using the filter tool, sort of filter. You can filter through these and say, right, we're going to filter out all of the ones which have a candle with one candle complete range above the 50 EMA, and you can filter all of those results out and see which ones were winners, which ones were losers, and if it's going to affect your strategy or not. That is the purpose of the comments box. But for the time being, we're going to just keep going through here. We're going to chart stop loss 15 pips, chart profit target 15 pips, and we won 15 pips. So the result, 15 pips. Risk to reward was 1-to-1. Total risk to reward 1-to-1. This is going to add up if we're so at the moment it's just going to go 1, 2, 3, 4, 5, 6 because we're just constantly going to be 1-to-1 risk to reward. Risking 1%, then obviously 1% of £10,000 is £100, and we've won that, so it's £100. 2%, obviously 2% of 10 grand is £200, so we've won that. Risking a fixed amount. I don't recommend risking a fixed amount, but I've just chucked that in just in case for some reason you want to. I strongly recommend against using I recommend using a fixed percentage, so that your risk will go up with your account balance. Here we've got all of the important stuff. So total number of trades, total number of winners, total number of losers, average win, which obviously at this point is going to be 15 pips because we're risking 15 to make 15. Average loss, at the moment we don't have any losses, so that doesn't matter. Win rate, at the moment obviously we've only had one trade, 100% win rate. Expectancy, again we'll run through that when we get something in. Actually, I've gone through all of this in that backtesting spreadsheet video on my website, so just watch that. If you're confused by what these things mean, watch this video and it will explain everything. Again, I'm sort of digressing here, but these are all the important figures that you want to take into consideration. So like I said, with this strategy, we're going to keep going back through the history of the chart. Actually, we'll go forward from here. So here, like I said, here we don't have a trade because one, we don't have a bearish engulfing candle. Two, we've got this complete range above the 50 EMA, so with no trade here. Come back up through, we've touched the 50 EMA, and we've got a bearish engulfing candle here. So this would be our next trading opportunity after this one here. Again, we touched it here, don't have an opportunity. Touched it again, waiting for that bearish engulfing candle, and we get that here. So this candle completely engulfs previous. Yeah, so bearish engulfing candle here. So we're going to enter here, risking 15 pips. 150. Risking 15 pips, so our price is going to be 1.10227 to make 15 pips. Again, we're going off the close of this, so as soon as this candle closes, we're going to enter the trade to make 150. 1.09927 here. So obviously we don't go up any higher, we don't hit our stop loss, but we come down and hit our target. So we've got another winning trade. Input that into here, 15. Result number 2, 15 pips, risk to reward 1 to 1. Total risk to reward is obviously 2 to 1, 2 at the moment. And again, gone slightly higher now because we're now risking 1% of £10,100. Pretty simple. Okay, and again, this is going to add up with this. So again, just going to go through. We would have been stopped, hit our target here, so we wouldn't have got in on any opportunities here because we'd still be in that first trade. So we'd have got out here, so now we're looking for our next opportunity. We obviously don't get anything up here because it's all above the 50. Don't get anything here because we've had, this is a bearish engulfing candle of this previous candle, but we've had all of these close above it. So we want a nice clean break below, candles closing below, a touch, and then an engulfing candle like we have here. This one we've broken above, closes above, closes above, closes above. We don't want to trade this because we've had the previous loads of entire ranges of candles all above this 50 EMA, which is a sign of a reversal, which we obviously get here. So now we're looking for buying opportunities. Again, exactly the same, just in reverse. So we come back down here, we get a touch. We're looking for a bullish engulfing candle this time. Touch. This one obviously isn't a bullish engulfing candle. Another touch, and we get our bullish engulfing candle here. So at the moment, we're going to enter on the close of this candle. Closes here. I'm going to risk 15 pips, again 150. Down here. Wherever it is. 1.10626 to make 150. 1.10926. Okay, so obviously here we immediately move higher, so we're not going to come anywhere near our stop loss. So another winner of 15 pips. And we've been closed out this trade here, so back into our spreadsheet. Again, add in the comments the date and time. Next, so we'd close out of our trade here, so now we're looking for more trading opportunities. We get a touch here, we don't get our bullish engulfing. Another touch, we don't get our bullish engulfing. We get a nice reversal candle, but it's not an engulfing candle, therefore we won't have entered the trade. Keep going, keep going, keep going. Again, we get a bullish engulfing candle here, but it hasn't touched the 50. Again, you could trade this depending on your strategy. You need to be as specific as possible and stick to this. Once you live trade it, you need to stick to it. So here we get a touch, we get another touch, and after this touch you could say, right, I'm going to enter the trade based on the next bullish engulfing candle. So that one in this example would have been here. So we completely engulfed the previous bearish candle, so we'd have entered the trade here, and this would have obviously been profitable. 150 to make 150, so we would have got out here. However, for this example, I'm just going to say it has to happen after a touch, but you can implement that. Say you got in here, again you're going to get out up here somewhere, then you could get in on the next one, which would have been this here. So bearish candle followed by bullish engulfing candle, and this one probably would have been a loser. 150, yeah, so we wouldn't have hit that, we would have just reversed and hit a loser. So at some point obviously you're going to get that. Here then, we're still looking for buying opportunities. Even though the price is now below both of these moving averages, the 50 is still above the 200, so we're looking for buying opportunities. Break above, back down, touch, we don't get a bullish engulfing candle. Depending on what you class as bullish engulfing, I like mine to be a bullish engulfing candle engulfing a bearish candle. This is a bullish candle, so I wouldn't have traded this. Again, based on your reasons, your strategy, you could have traded this and it probably would have been a winning strategy, a winning trade, sorry. But again, this is all very specific to the individual. You can implement whatever you want. So here again, we get a touch. We don't have an entire range below the candle. Obviously this one opens above the 50 EMA, even though it closes below it. We don't have the high, the low, the open and the close below it. So we actually have the open and the high above the 50 EMA. So this is still a valid trade. So we'd have got in on the close of this bullish engulfing candle here, risking 150 down here, and to make 150 up here. So obviously we don't reverse, so we don't come down to our stop loss, we just keep going higher and higher, so that would have been another winner. 15 stop loss, 15 profit target, and we hit our profit target. And again, you can see this is going up and up and up with the risk. It would be nice to find a loser so you can see what happens when we get a losing trade. Again, another winner here. So we come back down, we've touched. We don't have an entire candle range close below the 50. We're still looking for buying opportunities because the 50 is above the 200. Bullish engulfing candle, engulfing a previous bearish candle. Again, risking 150, 15 pips. To make 150, 15 pips. So at the end, another 15 stop loss, 15 target, and we hit that target. Come back down, we get a touch. Now we've had an entire range, so the high, the low, the open and the close are all below, so we don't want to look for opportunities here. We need it to break back above the 50. Broke back above the 50, we get a touch, we don't get an engulfing candle here. Back above the 50, a touch, we don't get an engulfing candle here. Back above 50, touch, we don't get it here. Back above 50, touch, nice reversal, and we get this engulfing candle here. Again, risking 150 to make 150, or 15 pips to make 15 pips. 150 is down here to make 150 up here. So again, another winner. Back down, we get a touch. Now an entire range below the 50, so we can't look for buying opportunities now. Again, break above, touch, no engulfing, and then a range below, so we're not looking for buying opportunities. We haven't had a close above, so we're not looking for buying opportunities again. And we've crossed over again, so now we're looking for selling opportunities. 50 is below the 200, so we're looking for our selling opportunities now. So we get a touch, no bullish, bearish engulfing. We get a touch, no bearish engulfing. I don't think that's an engulfing candle. Let's measure the high and the open and close. 902, close 892. So it's 10 with 1 pip. 894, 903, 9 pips. No, 11 pips. So this, the body of this is 11 pips and the body of this is 10 pips. So even though it is slightly offset, it's not actually an engulfing candle. So I'm going to guess that there's a gap for some reason in the market. So it's gapped down slightly. So the body of this is only 10 pips and the body of this is 11 pips. So this body is actually bigger than this body. Just make sure I have actually done my maths right on that. Let me show you what I've done here. So the open 1.10902 and the close 1.10892. So obviously 902 minus 892 gives us 10, so that's 1 pip or 10 micro pips. Open here 10894, close 10903. 10903 minus 894 is 9 pips. Yeah, 0.9. So it is actually sorry, I've done that reverse. So this is actually a bearish engulfing candle. This 1 pip and this is 0.9 pips. So this is, so we'd enter here. Again, risking 15 pips. It was this one here. Risking 15, we're going short this time. So 150 here to make 150, which is here. So we'd obviously hit that on this candle here. So again, 15 pips to make 15 pips, and we've hit that. Now this is looking sort of too good to be true, which is why I'm trying to find a losing trade at the moment. Here we come, so we would have got closed out here, so any opportunities here we'd have missed because we're already in a trade. Come back up, touch, we don't get an engulfing, touch, we don't get an engulfing. Now we've got an entire range above. Let's actually include this. So like I said, we've got an entire candle, the high, the low, the open and the close is above the 50 EMA. So personally, you can test this, but I wouldn't personally trade this. Not that I trade this strategy anyway, like I said, I'll use my patterns. But test it, include it in your testing, and then you can filter it out. So we have bearish engulfing candle here, so this candle here completely engulfs this previous candle. So we're going short 150, and our stop loss is going to be up here 150, and obviously hits our stop loss. However, this time we can put in the comments, so 15, 15, minus 15. Here we can put in one candle range above 50 EMA. That's what the comment box is for. Implementing or including information like that. So now obviously at the moment we wouldn't be trading this because we've noticed this has been a loser, and this is what this is the difference between this trade and the previous trades. It's completely different strategy because we've allowed for that one candle range above the 50 EMA. Yeah, and it's obviously been a loser, therefore based on this small amount of trades, therefore we don't want to trade these. So we're not going to include that. We're not going to allow that in our strategy when we're live trading because it's been a loser. And again, we've lost 1% of £10,721. Now we've got loser, you can see our win rate is 88%, loss rate 13%, so on and so forth. Total, I haven't changed this, so you need to go through, select the data. So that, again, I can go on for days and just go back through. It's going to take me a while, and I don't want this video to go on for that long. But keep going through and testing all of these and implement them into that spreadsheet, and then you'll be able to see if it's a profitable strategy or not. Again, this has sort of worked not necessarily against me, but you can see we've had a significant amount of winners, one loser, and that one loser is actually deviated from the normal strategy. This isn't, well, it is real life because you've obviously just seen me go back through and test it. But if I carried on testing and testing and testing, we'd probably have this many losers in a row as well at some point during the testing. So do not think just because I've shown you however many trades this is, 8 trades. Just because I've showed you 8 trades, do not go and live test this. You need to go and test this yourself. And if you do go and live test this, full disclaimer, do not come and try and sue me because I've showed you this strategy and you've thought that it works and it suddenly doesn't, and you've lost all your money. So yeah, that is what you're going to do. Find something that you want to test, whether it's this strategy that you want to go through and test, one of my other strategies that I posted on my website or on my YouTube channel, whether it's someone else has posted a strategy, or you just come up with something yourself. Go and find a strategy, even if you think it's a rubbish one. It doesn't matter. If any way to extract money from the market, it's a good strategy. It doesn't matter how bizarre it is. Don't let anyone say it's rubbish. Don't let anyone put you off. You could use all sorts of weird and wonderful things. You don't even have to use candlesticks. You can use Renko bars, a line graph, whatever. So long as it's making money, it's not a stupid strategy. So go away and test whatever strategy you want to test and implement them and put them into a spreadsheet. Once you've got them into a spreadsheet, you can start doing things like this and filtering out all of the bad trades, and therefore increasing your win rate or altering the risk. So you can try this. So once you've got this strategy working, you could try testing it with a 2-to-1 target. So risking 15 pips to make 30 pips and see if that increases. It'll probably decrease the win rate, but it might increase the that's the money management side of things. It might increase the amount of money you win. So you don't have to have a high win rate with a 2-to-1 risk to reward. You could have half the win rate and still make as much money. Hope that makes sense. So I promise I'd show you some of my testing. So let me just pause this quick and get my results up. Okay, so these are my results. This is what I am trading at the moment. You can see custom 1.05 because I'm trading a custom pattern. You can see the pairs that I trade, number of trades, so on and so forth. Now, I'm risking 1-to-1 risk reward. So like the strategy we showed you just then, 15 pips to make 15 pips, I'm risking exactly the same 1-to-1 risk reward. But because I'm trading the patterns that I showed you based on my software, the advanced patterns, my custom advanced patterns, so my own ones, the pip value does actually change, but because it's 1-to-1 risk to reward, so whether it's 100 pips to make 100 pips, or 10 pips to make 10 pips, or 32 pips to make 32 pips, it doesn't matter because it's 1-to-1 every single time. So the number of pips doesn't actually affect my trading because I'm risking 1-to-1 every single time. So to simplify things, I've just left it at 100 to 100. So because it's 1-to-1, this could be 32 pips to make 32 pips or whatever. It doesn't matter the pips value. All I'm interested in is the money, because that's why we're in this at the end of the day. We're only interested in making money. So the pips value doesn't matter because you know it's 1-to-1 risk to reward every single time. Risking, I personally would recommend risking 1%. So this is the one we'll focus on. So risking 1% of the account, whether this is 32 pips to make 32 pips or 15 to make 15, doesn't matter because we've risked 1% on that 15 pips or 1% on that 32 pips. So the pound or the whatever currency you're trading in, the monetary value of that risk doesn't change. So here 1% risk is of £10,000 is £100. Obviously we've had a loser, so we've lost £100. Whether it's on 100 pips, we're risking £100 per 100 pips, or on 15 pips, we're risking £100 on 15 pips. So the pip value doesn't matter, it's not going to affect this. Hope that makes sense. So all we're worried about is whether it won or lost. So this is my live, my actual backtesting results. So this is what I've based all of my live trades on. There's a lot of spreadsheets before this that, again, like I said, showed you at the beginning of the video, the backtesting using my software. So I click on the pattern, I've gone through, I've analyzed the results of those backtesting results, which I've put in another spreadsheet. I've then combined all of those together, put that in a different spreadsheet. I've then filtered out all the bad results and kept all the good ones, put that in a different spreadsheet. And then I've copied across all of the good results, the winning strategies. Obviously I've had a load of losing strategies as well, so I filtered all of those out and deleted those. So I've only kept the winning strategies. I filtered through those winning strategies to increase the win rate because at 1-to-1 risk to reward, I'm not interested in it at the moment. I'm not interested in altering the strategy. I just want to increase the win rate. So I've filtered all of those through. I've deleted all of the bad ones. I've kept all of the good ones. So I know exactly what I'm going to trade every single time. And then I've copied all of those from every single one that I've gone through. So every single pair, I personally only trade the hourly time frame. So for every single pair, I've tested a strategy. I've gone through that strategy. I've filtered all the bad trades out. I only trade the good ones. I've kept all the good ones. So I then implement it into this spreadsheet. Again, I've gone on the Euro Yen, done exactly the same process, implemented into a spreadsheet. So you can see here, I've obviously gone through the New Zealand dollar, all of the results, and copied it into this spreadsheet. Find another pair, obviously dollar yen, done all of that, copied it into the spreadsheet. I've then gone on here, filtered it through date order, which has come up with this. Then gone here and sorted out all of the menial bits just to make it look nice basically. And this is my results. So here, starting from 2005, I've backtested all the way back to 2005, all the way up to 2019. And this is the results. So you can see risking 1% of the account, starting with £10,000. Using my strategies, 1-to-1 risk to reward, this is what the results start to look like. So 2005, on this column here. So at the end of 2005, so start of 2006, we've made almost 60%, or end of 2005, we've made 60% return. 60% in 1 year, not bad, risking 1% of the account. What does that look like on the chart? 2005, this is what that chart looks like. Okay, now you don't know where you're going to start on this equity curve, yeah? You could start trading, you've come up with all of this, you've done all of the back testing, right, you think, okay, brilliant, it's going to start trading now, we know what we're doing, we're not going to deviate from this strategy at all. You start trading at this point here, and immediately you have one trade, oh, bit of a winner, another trade, two trades, oh, a bit of a winner, loser, winner, loser, oh, two losers, two winners, four losers in a row. You think, this isn't working. Right, you think, right, okay, I've been trading for what, call it a month now, I've had 15 trades, most of them have been losers, okay, I'm going to quit, or I'm going to start deviating from my strategy, I'm going to start changing things, I'm going to leave the trades running and move my stop loss, move my profit targets, start messing around with the strategy, when if you'd have left it alone, within 3 or 4 trades, you've already broken above your previous equity high. Again, a couple of losers, and then a massive push to the upside. So at this point here, you would have obviously, if you stuck to the plan, you'd be making money, you'd be in the profit. But because you've started here and you've gone straight into drawdown, you panic, you're letting your emotions get involved, and things just go from bad to worse. Which is why I've fully automated my trading. So I just run my trading through a virtual machine, which Forex.com actually provide for free if you've got a certain amount of money in the account. If you've got over that amount of money in your account, they provide this virtual machine for free, which allows you to run your expert advisor 24/7 and without having your laptop or your computer or whatever it is you're trading through on all the time. So your expert advisor runs 24/7. As soon as those patterns occur, it automatically places the buy or sell order, it automatically puts in my stop loss, my profit targets, takes into account the spreads, everything, it does it all for me, and it will enter the trade or it won't. If the pattern gets invalidated, my order's deleted. So I've taken everything into consideration here, and therefore my emotions are completely removed from my trading, which allows this to just naturally take place. Again, you could start at this point here. If you started at this point here and you think, all right, I'm on a winner, massive push to the upside, you're going to start bragging to all your friends, you're going to think you're a pro, you're going to think you've mastered trading, it's just a license to print money, and you're going to get cocky, start making mistakes, da, 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 da. You need to just let the strategy play itself. You know that it's not going to be a straight line. Your equity curve is not going to be a straight line. It's going to be a slow and sluggish process to make money. But over time, if you stick to a strategy and you've done all of this back testing, you know it works, there should be no reason to deviate from it. Like here, for example, 2006, all the way up till this obviously isn't time dependent. So this 86 trades, this all could have happened in January, unlikely, but it all could have happened in January. Then we've had 3 months no trades, again, very unlikely, but it could have happened. 3 months no trades, and then we start trading again. But just for the example, let's just say this is a timeline from January to December. So about June time, you've had loads of winners all the way up to June, and then the rest of the year, so the next 6 months, you don't actually make any money. In fact, you start the next year, 2007, with less money than you had in June. Yes, we're at about £21,800, and then in January 2007, you're starting with close to 20,000. So the last 6 months, you've actually just gone, okay, back and forth, back and forth. Can you imagine for 6 months having this process here, just going back and forth and back and forth and back and forth? That's going to be painful. For 6 months, you've got to sit there and just trust in your strategy. You're not making any more money. You're not making money. You're losing money. You've made it back. You lose it again. You've made it back. You lose it again. Over 6 months, you need to have a strong mindset. And it's all good and well watching this video saying, yeah, I got that, don't worry about it. But when it comes to real life and your live trading, your money's on the line. If you go 6 months, after having 6 months, you've made, however much that is, 8 grand in 6 months, 6 grand in 6 months, and then all of a sudden you don't make anything for the next 6 months, you're going to think, okay, my strategy is not working anymore. It's not working. And you're going to start deviating from that. and that's important. You need to be able to stick through this rough period here, because 2007 comes along, wham, you've doubled your account. You've made 100% in 1 year. But if you'd have gone through this 6 months and started giving up, you change your strategy, you don't think it works anymore, you would have missed out on this massive gain throughout 2007. That is why this is so important. Trading, 60% psychology. Again, I could give you this strategy, which I do. You purchase my software, I give you all of this for free. I give you my strategies on every single pair. I tell you what I'm trading. I give you the setups. I give you the custom setups. I tell you what to risk. I tell you where to get in and out. I can give you all of that, but 60% of it is up to you. You need to be able to stick through this, which is why, even though I give this to everyone who's purchased my software, I give this to them, I tell them they have to go through and test this. I tell them, like I've told you today, I've gone through and download this Alpari demo account, go back in the history of the charts, go and test it. I've given you the results. You don't have to go back through and filter out the bad trades. I've given you all of the filtered data. I've given you everything. I've gone back through, I've tested it myself, I've filtered out the bad trades. I've only given you all of the good trades I am live taking. So you don't have to do any of the back testing stuff that I've done, where I've gone through and, like I said, filtered out everything and worked through it. You've got the filtered version. All you need to do is go back and test it to make sure that they all match this. Everything I'm showing you here, you would go back through and say, okay, at this date, did this pattern occur on the Aussie yen, custom pattern which I'll give you, on this date, this time, did that happen, and was it a loser? Yes, okay, so go back through and test it yourself, make sure it all matches, so you've got the confidence in your strategy and you personally have tested it yourself and you know it works. It's all good and well me giving it to you, but you could go through these 6 months and be like, okay, he's a scam. He scammed me, I've bought his software, I'm trading the stuff he's told me to trade, but it's not working. 6 months is not working. And you'll quit, you'll change, you'll go and pay a ridiculous amount of money for all these courses and stuff where they teach you all about stochastics and MACD and RSI, but they don't actually give you a strategy. And you'll chop and change strategies and you'll keep doing that for years and years and years and waste a load of money. It doesn't work like that. You need to be able to stick through this and you need to test it yourself so that you've got the confidence in your trading plan. Once you've done that, you can go through and alter this. I'll give you all of this, but you might find a way. You might say, okay, if I risk 2 to 1 rather than 1 to 1, then it doubles this return. It doubles it. You can go away and do that. Like, there's nothing stopping you. You need to create your own strategy which suits you and your mentality. And you need to be able to deal with this here, 6 months of no returns. Because you know after that, which is why we've done the testing as well, recovery factor, 64. So this recovery factor is an important number. What this is saying is during drawdown, so if you draw down, say it's £1,000, you draw down £1,000, you lose £1,000. The recovery factor is 64 times. So whatever the length of time it takes you to lose that £1,000, it's going to be 64 times quicker to make that £1,000 back than it was to lose it. So like here, we've lost, it pretty much is £1,000, 21,800, so call it 1,800 quid. We've lost 1,800 quid over, say, 6 months. Start of 2007, we make that 1,800 quid back pretty much within 7 trades. Yeah? Whereas here, we've lost it over 86, almost 100 trades. It's taken us to lose that 1,800 quid. Start of 2007, we make it back within 7 trades. That is our recovery factor coming into play here, 64 times faster than your drawdown. And that is the importance of all of this testing. Okay, we've got 65% win rate, To delve deeper into this then, I've gone in and worked out the drawdown. So drawdown duration and drawdown percentages. So start with a percentage. Drawdown percent, I know I've only had one since 2005 all the way up to 2019, so 14 years worth of data. However many trades, 2,860 trades tested, well, not even tested, are part of a winning strategy. So I've tested tens and tens of thousands, if not over 100,000 trades based on different strategies, different whatever, and filtered them through, finally come up with a winning strategy, filtered all of those, and these are all of the winning trades. of that winning strategy, 2,860 trades, I know there's only one time that I've hit 11% drawdown. Once. So I know when I'm live trading, if I exceed 10, even if I exceed 10% drawdown, I know that something's not quite right. Have I deviated from my strategy? Have I missed trades? Have I got in trades I shouldn't have got into? Again, this is where the automation comes into play, because you know with an automated strategy, you're not going to take trades that you shouldn't be taking, because you're just going to let it run, and it's just going to take every single trade that you've plugged into these. You've plugged these parameters in, you know exactly what you need to trade, and the computer's just going to do it all for you. So if you get greater than 11% drawdown, you know something's not right, because it doesn't tie in with your backtesting results. Okay, so drawdown periods here, drawdown duration, in terms of monetary drawdown duration. So here, this was that one, probably in 2005, was it? No, it wouldn't be, it would be later than that. Drawdown duration. It's probably here. 92 to 141. So drawdown duration, we know at this point here we've had almost 80 trades where we've not broken above previous equity highs. So what this is saying is you go from 10,000 up to 15,000, and then for 79 trades you cannot break back above that 15,000 level. On the 80th trade you finally break above 15,000. So in other words, you're trading, you're making money up to this point here. You made 15 grand, or up to 15 grand, so you've made 5 grand. So your account equity is at 15 grand here. You then draw down, so you go down to 14 and a half, 14 grand, 13, back up to 14, you get up to 14,900, so you're close. And then it comes back down to 14 and a half, 14.9, 14 and a half, 13, 14 and a half, 14.9. Until the 80th trade, you finally, after 79 trades in a row, you finally break above 15. So you made 15,100. Okay, and then here you go back down to 1550, and then you break 15,200. So here we've only had one trade where you've not broken above the equity high. Again, here we've had about 65 trades where we've not broken above the previous equity high. So this one was 687. So let's go to around 700 point. So trade 700 and see that as a live example then. 700. So what's that equity high? 2008. So sort of recession time, yeah. 75,000. So it's probably around 75,000. Bearing in mind we started with 10,000. So in 3.5 years we're up to 75 grand. Yeah, this is based on taking every single trade and not withdrawing any money from the account. So you're just compounding this income. 75.7. That's probably the highest. 75.7. So what we're saying is we're going to have, what was it said, 79 trades where we do not break above this 75.7. That is your drawdown duration, 79 trades. So here 702, so we should be at around 780 before we break above 75,700 again. So we go down, keep going down. Again, we've drawn down here where we've lost, 6 grand here. Down even lower, our low is 68,000. Still haven't broken above the 75,000. Oh, we're close here. Back down to 74. So we got close, but we didn't break above it. But down to 74. Again, got close. Broke down, 74. 75 again, close again. So this is that period I was saying about where you got 6 months of just fluctuating up and down, up and down, up and down. You haven't actually made any money, you're just floating around. Again, close here. So at this point, we're getting close to breaking above, and we've finally broken above here. 75.5, and then we get 76. So again, with our recovery factor 65, so it's taken us all of that time we've been in drawdown. 69 trades we've been in drawdown, but our recovery factor is 64. So we should recover 64 times faster than it took us to get into that drawdown. And you see that here. As soon as we break out of that drawdown, we're at 76, 77,000. 79,000, 80,000, 81, 82, 83, 84, 85. See, we're just making money really, really quickly now. Even though we've gone through this whole period of time. Where was it? 702, wasn't it? So from the 1st of October, beginning of October, all the way down to February. So we've had 4 months where we've pretty much not made any money. 4 months. And then all of a sudden, throughout March into April, you know, we've made 10 grand. That's what you need to get into your head, the psychology, yeah? And that is why all of this is mega important, because you've got the confidence through doing all of this. You've got the confidence in your strategy to be able to stick out that 4 months of shit, because you know that at the end of that 4 months you're going to come out of it 64 times faster than you went into it. So without going into further detail, and this has already been a long video, but hopefully it's given you the confidence you need to go ahead and actually start creating a strategy, start trading. Yeah, any questions, drop me an email. There's going to be loads of stuff I've missed. You're going to have questions. I'm free to answer anything, any information you want. Drop me an email, drop me a message, and I hope you enjoyed the video. Thanks for watching.